What's up, YouTube? It's Joe Cacciapaglia sitting on the couch, making some money investing in fractional real estate online, as usual. So Mogul put out a new property yesterday, the Singletary? I don't know. I never get where their names come from, or I rarely do. This is a Padsplit in Houston, Texas. Lot of stuff to like about it. I mentioned in my last video I had some issues with this due diligence video, and I'm starting it over. And just going to try to get something out relatively quickly, just because they've already sold out about half of the equity already. It has only been out less than 24 hours, so I figure getting something out is better than nothing. And I'm sort of running out of time before my kid gets up for school in just 30 minutes. So I wanted to share what I've come up with so far. This, really nice numbers of what we've come to expect from Mogul, right? Average yield 15%, levered IRR 14.6%, year one yield 9.2, and this is which is below the T12 actuals, meaning that they're being conservative with their underwriting. Again, we've seen them do that quite a bit. It is a 10-bedroom, 4-bathroom home with 2 en-suites. I don't actually love this because it means you have that 4-to-1 ratio for the 8 bedrooms that don't have an ensuite, right? It's 8 bedrooms to 2 bathrooms. I know Padsplit's okay with it. I just like when you have a little bit better bathroom ratio than that. I think it tends to, it's good for keeping tenants longer term, right? I mean, I think that's one of the thing people complain about living with other people. They did mention that it is, it's fully or an extensive renovation, so they expect it to be very turnkey. A lot of the stuff we've come to expect from them. That's one of the things, Mogul's definitely still my favorite. I've passed on several of their properties recently, but they're just very good at consistently putting out good deals, and so I'm just really cherry picking, right? I don't have to buy every single one. I am trying to get some diversification from, different markets and some of their short-term rentals, some of their pad splits. But I've gotten to be pretty picky. If there's really any reason at all for me to pass on one, I've been doing it so far. Because, if you remember, all of this is an experiment for me at the moment, right? All the fractional real estate investing. I want to put some money on each platform, see how it does. I'm doing my own due diligence on every single property, just like you should be. But not, I'm not moving a massive portion of my net worth onto any of these just yet. And so, as time goes on, they've had some hiccups on some of the properties that I've bought. Just want to see how those work themselves out. And then just continue to pick up what I think are the very best deals on the platform. You can see a lot of the Houston ones seem to sell out the fastest. In some of the other Houston videos, I did a little bit more info on the market. Not going to do that today, but in general, very strong. There's the population growth is very strong there, which is one of the main things that I look at. But if you dig into that market, there's a lot of reasons to like the Houston market that I'm just not going to get into at the moment. Purchase price $303,000. This is one of the things I've talked a couple times about some of the other Texas contracts not having this actual appraisal contingency, and this is the form that I'm referring to when I say, hey, they don't really have it. And normally, when I'm doing a contract here for my clients, which I am an agent in Texas, I'm not your agent, so I'm not giving you advice on this contract. I'm just telling you. What I normally do when I'm using this, I usually use this section 3 on every single contract to give me some additional right, my client's additional rights to terminate over and above what you get from the third-party financing addendum. A lot of the contracts we've seen on Mogul, from Mogul haven't used this. I don't think it's the end of the world, and I went into a little bit more detail on what the real difference is in an earlier video. But this one is not using it for that. They're using it as a partial waiver. And so they're saying as long as it appraises for $298,000, we still have to close, even though they're paying $303,000. $5,000 difference. Honestly, I don't think that's a big deal. I think if because you're getting all the, FF&E, the furniture, fixtures, and equipment, that it makes perfect sense, right? We're getting everything in an operating pad split. So yeah, if the building isn't actually worth 303, I don't think it's the end of the world. To just say, hey, we're gonna just cover that other 5,000 in cash. It makes a whole lot. I've done this. I've had my team do this for clients in the past when we are buying. You're picking up significant assets beyond just the property itself. And $5,000, I'm perfectly fine with that. I don't think that's a big deal at all. One of the things I always like to do is just shut off this refinance and see how we're doing here. See if this is what we get down to 14.3 and 13.4. So it's doing a little bit of work, but not really much at all, right? These numbers are still, especially that average yield, still a fantastic number. IRR, we're in the teens. I'm perfectly happy with that. But rates have been on the decline. I think it's a pretty reasonable assumption to think we're going to be able to refinance sometime in the next 5 years. I just like to see what it's going to look like without it. I didn't pull up the pad split listing or numbers. Again, just trying to get through this, get something out pretty quickly. Especially where they're projecting below the T12 actuals. I'm just okay with that, right? It's one of the things that I just figured if I have to pass up something, that's one of them. Look at the flood map in Houston every single time I'm going to look at the flood map because it is a place where there are flood issues. And you can see, we have one of the shaded X zones coming all the way up, down our road, but not actually, it doesn't look like it's hitting our property. And if you remember, I've even pulled the trigger on a few that were in this shaded X zone. So I'm perfectly fine with that. But if you look, the reason that we check every time is because if you zoom out, you can see, we've got quite a bit of flood zone in this general area. So, and in Houston in general, it's just, there's all kinds of places. You could have a pretty high flood risk in some spots. Pulled up the crime map. This is probably the best crime map we've seen in a Houston property. I think it's because it's pretty far outside of the city center. I'll show you that in a minute on the map. But this took 9 days, it looks like, because I think it's just through the 20th to generate this many crimes. Yeah, it's still not great compared to some areas, but it is one of the best ones we've seen in Houston. Let's see, and this is the neighborhood scout, where it gives you the shaded. I believe we're in this section. We might be over here, but I think we're right. We're sort of on the border between these two sections, and you can see, it's some of the some of the lightest shaded areas. This one especially, but this is still, we've seen some where we're in these over here, and I think that this is probably this one, and this may even be, I don't know, even less so. So as far as Houston goes, I mean, this is, it's tough to find a crime map this favorable for us, especially when we're looking at properties for pad splits, right? I mean, they tend to be in the in areas that are a little bit worse than some of the short-term rentals, although not always. That's not always the case. I think we got some short-term rentals in the real dark area in Houston over on here as well. Let me just close these so we don't. Yeah, that's just getting my little heat map up. Okay, so that's I'm fine with that. The other thing that I'm always having some issues with, like if I pass on something, it's very often because of this estimated market value relative to what we're paying for the home, right? Purchase price $303,000. Zillow thinks this is worth $188,000. But if we look at this, Zillow also thinks it has a lot less square footage than we have, and it also doesn't know about how many bedrooms and bathrooms we have. One of the things, if you remember, I've talked to Mogul a few times in the past about, when we have a big discrepancy from what's potentially in the public records. And, just to be frank, I didn't actually pull up the public records for this just yet. Again, just trying to get something out there, give you some thoughts on some things that you might want to look at to be sure. But so whenever there is a discrepancy in the square footage, it's part of their due diligence to make sure that all the space was permitted. Now you can see, obviously, this was a garage in the past, and it's been turned into living space. It's something that they check on to make sure that was done properly. I've just come to trust them on that, right? It's something that it's difficult to look up basically, you typically have to contact the city. Depending on what city it's in, that process might be different. It might be a county some places. I was trying to, dig into some of that stuff on earlier properties until they just explained, hey, this is something, it's part of our due diligence checklist. We're going to always make sure it's the case. And so far, they haven't given me a reason to doubt them, right? They've been performing on all the stuff that they've said. So that's one thing I haven't been digging into myself. It doesn't mean that you shouldn't, but that's just where I am on that. One of the things that I noticed that worried me a little bit is a lot of the windows in the bedrooms do not look like they are qualified egress windows. And that's just from my eyeball looking at them. Typically, building codes vary all over the place, but typically, to qualify for an egress window, your diagonal has to be a certain number of inches. The ones that and then even, the up and down has to as well. The ones that I think look the most suspect are these ones here. Whether or not that's truly an issue, I don't know. I'm assuming that's something that, typically this is going to come up in your home inspections. And so it's, it is a question that is outstanding in my mind. I didn't have a chance to ask them. This one also looks a little bit small, but not terrible. And then this one, I think it looks like there might be bars on this window. And again, most of the time where I am, we actually have to take the bars off the window or install a quick release on those bars so that someone from the inside can take them off. So, that was just one thing that I noticed that stuck out at me. It just was really obvious on the arch-shaped window. Where'd it go? It really looks like just this bottom piece moves. And I don't know. Maybe it's just my perspective on this, and maybe the angle of the camera. But that's something that I'm a little bit curious about. Oh yeah, jumping back into the valuation, you can tell I probably shouldn't have even put this out at all. But I wanted to get something going, and we're just basically running out of time. So Zillow thinks the price is way off. Okay, if we add another, say, 25% square footage, it still doesn't quite get us there with Zillow's estimate. But if we do it with, so what are we on right now? Realtor says 240. If we added another 25%, because we've added livable square footage, well, then that gets us really close to 300. And then the same thing with Redfin. Again, they think we're the smaller square footage, and if you did that adjustment, let's actually look at it, right? So 2380 versus 1860, right? So this is what I would do here. I'd say 2380 minus 1860, 520 divided by 1860. Yeah, so it's actually almost 28%. Multiply that, right, times 247,004 plus, so that's the difference, right, 247,004, and so that actually gets you to 316,000. Now, a lot of times when you convert a garage to livable space, well, you got rid of your garage too, right? So you have to make an adjustment because now you no longer have a 2-car garage. So, but so I don't think it's worth 316 even with those. I wouldn't guess that based on the square footage, but I do think 303 starts to seem reasonable there. But it is, it's the one thing I'm always a little nervous about, right? Because yield is temporary, basis is forever. So yeah, they're putting out great yield on these deals, but I really get worried that we're overpaying sometimes. Um, and for whatever reason, I feel like the Houston properties are some of the ones, or maybe just the Texas properties in general, are some of the ones I feel the most uncomfortable with. Uh, I'm not really sure why that is. Oh, I think one of the reasons, a lot of the Houston ones, like we had those purpose-built pad splits, so those were real hard to value. They're also seeing a lot of the 10-bedroom ones. I think the more bedrooms you get, the less it looks like a regular single-family home, the harder it's going to be to value. Um, and I think they feel like they can get away with more bedrooms in Houston because of the way the zoning or lack of zoning works. I'm really not sure. So anyway, I think, I don't hate the valuation. I mean, if we were just going to use Zillows, I'd be really worried. But one of the things, they always give us their comps, and this worries me when they do this, right? So, okay, we've got 3 real good comps. Weighted average gets us, similar size. Okay, ours is a tiny bit smaller, but it's really not even. Yeah, it is actually. It's like 120 square feet smaller. They're doing. But when we look at where these comps are located, so this is our subject property. This is the first comp, and so that's pretty close. I mean, we're still going a little further than I would normally go if I'm in my market, looking for comps for a home. But then the second comp is way over here, and the third one's down there, and that really worries me. Like, we couldn't find 3 good comps in this area. That makes me think we're stretching, right? But as we usually do, we do have the appraisal contingency, and so it gives me a little bit of comfort. Overall, this is a tough one. I know I just keep passing on Houston ones. I own a couple of Houston, the short-term rentals that Mogul has in that market. So I already have some exposure to the market in general. I just don't really love these, like, the ones that have a ton of bedrooms. I worry about, okay, what's that going to look like for resale? If for some reason we can't sell it as a pad split in the future, I think we're going to be in a lot of trouble with it. It is, I think that's why the 6 and 8 I get less worried about than 10. Or like the last one, the Malone that I did buy a piece of, it was a duplex, and so you can imagine it can be its number of bedrooms per unit. But again, in Houston, we don't have that same like single family zoning districts that you have in a lot of other places. So maybe you get away with it there. I don't know. It's a tough one for me. I'm not sure. I'd really like more time to dig into this, and I'm just not sure I'm going to have it before it sells out. And if that's the case, maybe after my kid goes to school and I go to bed for the day, because most of the time I sleep more during the day than at night. I know that's kind of weird. Maybe then I will get back up and do a little bit more research, and if it hasn't sold out yet, have a better decision about that. And then, so the other thing, let's do the little bus stop. Okay. You're just using that to figure out where is the closest bus stop. And that's very close. So that's nice, right? It is just, how many minutes of a walk is that? Oh, wait. That can't be. That's not right. Something's going wrong there. Because this is not, I'm just missing something. Usually this first walk, 31 minutes. No. That doesn't look like a 31-minute walk to me. I'm doing something wrong. Oh, let me do this. Oh, that's stupid. Oh, that was terrible. Okay, go back to the transit. Let's zoom in here. And how long is this leg? Why aren't I seeing this first leg? I just don't believe that's that long of a walk. It just can't be. Oh, let's just do this right here. Delete that. And okay, 7-minute walk. Yeah, I don't know what I was seeing before. 7-minute walk to the bus stop. I like that a lot, right? That's something I like about it. Yeah, it is, the valuation is just the only real concern. And then I am curious about, are these really egress windows? But I believe that's something that they're going to look into during their due diligence. It'd be great if we had the time to be able to reach out and ask that question and get it back before this sells out. Anybody that wants to do that, feel free. And please jump in the Discord and share with us what you find out. I know this is a very incomplete video, but it's really all I've got time for today. Just wanted to get this out there. I'm not sure. I think I'm probably going to pass on it where it stands right now. I know I'm not going to pull the trigger on it at the moment. I do want to dig into that value a little bit more, see where it stands tonight. I mean, it just really worries me when they do this, where they're pulling comps from so far away. Like to me, it's a big red flag. Like, what are we doing here? It's a big red flag when they have, I don't know what happened. I got rid of all my intermediate destinations. Anyway, when they have those, when they have to go so far outside of the subdivision to get good comps, it's pretty worrisome for me, because I don't ever have to do that here in San Antonio unless I'm just really reaching to try to justify something. And it doesn't look like what they did was like go and grab multifamily ones. So I'm not really sure what's going on. Maybe they're going and grabbing ones that are, have a lot of renovation. I guess it's possible those were pad splits and I just didn't even pick up on that. Let's see, 5255 bungalow. Let's look at that. Let's look at this one and see. No, it's a 3-bedroom, 2-bathroom house. I mean, it's a little bit bigger. It just seems really strange to me that they have to go, that they're not able to find comps closer that are going to justify that value. But anyway, that's it for me for today. Feel free to, I don't think I said this. Maybe I did and I just forgot. Please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, Mogul included. Please feel free to use those links, but do your own due diligence on the platforms and the properties. Just because I'm investing on there doesn't mean that you should. I also have a link set up to the Discord where we talk about all different fractional real estate investment sites and different properties and strategies. Feel free to jump in there and have a discussion with us if you haven't already. The Mogul thread is usually pretty busy. Quite a few people are investing on here and sharing thoughts on this, on the due diligence on these properties. So feel free to jump in there and discuss. All right, I think that's really it for today. Until next time, I'm going to keep making mistakes so that you don't have to.